We are going to talk about budgets. In households, a lot of times that's the B word, budgeting, but for a business, it's crucial. It's part of your planning. You have to understand how much your sales are going to be so you can understand how much you need to make and how much that's going to cost you, and so on and so on. So budgeting is a very important part of cost accounting because we're going to estimate our costs in the future. Alright, so we're going to define budgeting. We're going to prepare an operating budget for the most part. Well, we're going to prepare the operating budget. We're just not going to prepare cash budget. So all the budgets obviously all flow together, but we're going to really stop with the cash budget. I feel like that's more Treasury Department stuff. And when we do our variances out in Chapter 9, we're doing those based on our operations. So we're not, worried about cash flow. So let's go ahead and talk just about operating budgets out of Chapter 8. All right, so don't worry about that cash budget stuff. We're going to define flexible budgeting, and we're going to identify a little bit about goal congruence and keeping things working smoothly. All right, so a budget is a quantitative plan for the future. So it's easy to say we want to increase sales, right? But getting our planned sales down, how much we're going to sell, how much we need to produce, how much that's going to cost, how many labor hours we need to schedule, that's quantitative, and that's what a budget is for. Control is where we receive the feedback from the budget. So we need to understand, budgets are estimates, right? So they're not going to be perfect, but it's important that we understand where we're getting off base on our estimates. So we look at how the budget differs from what we actually realized, and we call that a variance. And so we need to look at those variances and think about, okay, why did that occur? Well, most of that's going to come in Chapter 9, but we'll talk a little bit about the general idea of a variance in this chapter. All right. So there's what we call a master budget, and it basically describes or predicts how we feel the direction of the company is going to go for a quarter, for a year, for 5 years. It involves strategic planning. It involves long-term objectives and involves short-term objectives. And then we have our budgets, and we have our actual operations that we run, and then we get feedback so we can improve on our objectives and our budgets. All right. Forces you to plan. I mean, you can't just run your business by the seat of the pants. Sometimes you can when you're a new small business, but once you get some employees, once you start having to think about the future, you have to make plans. It provides resource information to let you make better decisions. If you know how much raw material you're going to need, and you can plan on how much you're going to buy, you can get better deals, you can decide when to time your buying, things like that. Better use of resources, good for performance evaluation, all kinds of good reasons for budgeting. All right, so the budgeting process. I'm not too concerned about you knowing there's a budget director and a budget committee, maybe, if you work at a really big company. Typically, the budget director, the places where I worked, was also the controller, somebody in the finance or the accounting department. And really the managers of the individual departments did the budgets where I worked. But you can actually see at the bigger companies that need more control, right? Because you got so many things going on, so many people doing so many things, you might very well have a budget director and a budget committee. That way you have a sure line of communications. All right? So there's a master budget that includes everything for the year. There's operating budgets that are concerned with the income generating activities. That's what we're going to do. So if you go out and watch the videos for problem 8.36, all those are going to be part of our operating budget. Financial budgets are the inflows and outflows of cash and financial positions. So typically a cash budget is something prepared to help anticipate borrowing needs or help establish whether or not we should, issue some equity, issue some bonds, borrow from the bank, that kind of thing. It's anticipating all the cash needs and the cash flow from operations. So you need the operating budget, so you're going to figure out the cash flow from operations. But remember, your cash flow statement, operations are not the only sources of cash, right? There's also financing and investing. So, and the needs for cash too. Not the only needs. So financial budgets, I'm going to kind of consider separate, and we're not going to do that in this class. So the master budget has a lot of separate little components. You need to start with a long-term sales forecast, and then you use that sales forecast to help design the sales budget, which then, right, that tells you, well, how many things do we think we're going to sell? How many units of whatever it is we sell are going to sell? Then that tells you, feeds into your production budget, right? Well, if we're going to sell that many in this month and that many this month, how many do I need to make? Well, if I need to make this certain amount, I need to budget for direct materials, direct labor, and overhead, right? So you do the budgets for those. Then you start flowing down into what becomes part of the cash budget, because you're going to need to understand your balance sheet and income statement, right? So you can go ahead and do your cash budget. So we're going to do down through budgeted income statement in problem 8.36, so you can see how that works. But the rest of the stuff that comes after that, like the cash flow stuff, we're not going to do. All right, sales budget describes expected sales for each product in unit and dollars. So that's important. That's obviously where you have to start. You have to have a starting point. And so predicting how much you sell is going to be important. And then that feeds into production budget. Once I know how many I think I'm going to sell, I can figure out how many to produce. All right, so I'm going to stop here with the first half of this, and we'll finish up chapter 8 on the next video, and then you can go look. I strongly recommend looking at problem 8.36 videos, because I work out a whole budget except not the cash stuff.